Well, a very good morning to you. Thank you very much for watching KBC Channel 1. It is time for BizCheck. My name is Betty Kiptum and Byron Abuli is my colleague on the sign language interpretation. Over the next 2 hours, we will be having a conversation on matters money. Where exactly do you invest in 2025? What are the available options? How do you look at your risk profile and how much risk can you take as an investor? And all that is coming up within the hour. And my guest this morning is Alex Kidake, who is an investment expert. He's here with me. We are also expecting Maurice Opio, who is the Managing Director of KCB Investment Bank. He will join us in a little bit. But let's start this conversation with Alex. Thank you very much for joining us, Alex.
Thank you so much for welcoming me at KBC.
Karibu sana.
Thank you.
Let us start with the investment landscape as it is right now in the country, kindly.
I think, according to me, Kenya is a very good place to invest, as in is a developing country. And you look at our country, if you make a wise decision, definitely you are going to make money because there are so many opportunities. But what I want to advise most of the people who really wants to invest in this country is that it's very important to have both the theoretical knowledge and the practice knowledge, because the moment you have the theory, the moment you do the research, then you'll be able to know exactly where you are going to invest. I want to give an example of some of the things, some of the opportunities that are in this country. If you want to do a very good investment, what I can advise our people is that make sure that you invest in anything that will not compromise on your capital. What do I mean by saying that? I want to give an example of property business. If you invest in property, what will happen? Let's say you have put up a house and you have tenants. In case those tenants fail to pay, the only thing that will compromise is your profit, which is the rent, but you still have your property. So when you're doing investment, make sure that when you're investing, don't compromise on your capital. The second thing is make sure that when you are investing, in most cases, you get payments before offering the service. The moment you do that, the risk of you following or the risk of losing money become minimal. Where you see most of these developed countries, when they're doing in the manufacturing, when you want to import any goods, maybe from China or from Vietnam, they will tell you the only thing that you need to do is you send the 50% deposit, then after manufacturing, you will be able to pay the balance. These people, what they have done, they make sure that there's no risk. You first of all pay before receiving the goods or service. Those are some of the things that you should be able to do. Another thing that is also very important is staying out of debts. Staying out of debts, that means that whatever business or everything that you are doing, your income should be more than your expenses. So that by the end of the day, you are making profit. Because most business, yes, they're making profit, but it's not sustainable. You make profit, but you don't have cash flow. That is another challenge that most of companies in Kenya are experiencing. I want to give you a very good example of what is happening currently in our country. I want to give you an example of River Road. If you go to River Road, there's a lot of cash flow. There's a lot of cash flow in River Road, but the only challenge that we are having in this country is that the region where we have the cash flow in this country, it's very small. If you look at River Road, it's a very small place. And if we can be able to extend, whereby we have a very big place where we can be able to extend the cash flow, where the trading, the people can be able to do business in different regions and be able to circulate money. Because the challenge that we're having in our country right now is the problem of cash flow. Yes.
I feel like when you talk about how businesses should maybe not accept to give services before they are paid, or that income should be more than expenses, it sounds very theoretical. Practically, there are very many instances when the business does not go in that direction. What is a business person to do in that case?
I know most people will find it hard, because that's why you see we have such kind of a discussion. When we have this discussion, it's very important for us to be able to tell our people, especially those who are in business. For somebody like me, I want to tell you that I got both the street and the box knowledge. I have gone through the street. I understand the challenges that people go through. You find there are so many importers who are bringing goods here, and they sell the goods. The goods goes to the client, even to the consumer, but they find it very difficult for them to collect back their money. And you see, that becomes very, very expensive, especially going to the clients asking for your money and you have already delivered or a service or goods. So what I always advise people, if you want to grow in this country, it's better for you to have your goods there, whatever that you have not sold, instead of going to the client asking them to pay you your money. So for me, I feel and I find that if you want to grow in this country, if you want to do good business, according to my experience, it's better for you to invest in those kind of businesses that you can be able to be paid before offering the goods and service.
Right.
Yes.
Let me bring Maurice Opio into the conversation. Thank you very much for joining us. He's the Managing Director at KCB Investment Bank. Yes. You've listened to what my colleague here, Alex Kidake, has just explained, and I'd like to hear from you what your outlook for the investment space in Kenya is currently.
All right, thanks for that question. I think if you're looking at investments and you're looking at a horizon of 2025, then you have to start with the basis where we come from in 2024. I think 2024 delivered significant returns to investors in the marketplace, and this I'm talking about the equities market, which we saw a rally. Closing around 36% if you take the NSE 25 stocks as an index. And equally, we saw a significant movement of investments in debt instruments. And this, talking of collective investment schemes, which also generated quite significant case. Now, from an investment, if you're planning to then do your outlook in 2025, what will be those significant factors that you'll be able to look into? And primarily, in this case, we are looking both internal factors which might impact that investment. I think there's a clear monetary policy stand that the interest rates really have to come down. We have seen that into the markets already feeding in. What that then means, you'll find significant allocations being done into the stocks. And if I look into the stock into this year and picking specific segments of the market, for example, the banking stocks, there's still significant valuation uplift which investors can get into. They're still trading more or less cheaper. I would expect significant allocation into the stock market. Another aspect which is coming in, and of course I know there are several policies are being done, is on the digital assets. I think if you look at what the US are doing, out of their policy stance, there's significant appetite into those particular assets. So those would be two specific asset classes I think would be able to anchor the year. When it comes to bond investments or debt instrument investment, then it's the question of how do you position your investment to make a significant return. That means, should I get into the market now, look into all available debt instruments which I can invest into and take my position. So those would be two perspectives that I would bring at this stage. Yeah.
We are talking to Kenyans. Kenyans are watching this program and they're asking themselves,
yes,
with whatever I have,
yeah,
what are the investment options available for me?
Yes.
Let me stick with you, Opio, and just answer that question to a common mananchi, a layman who has no idea where to put their money.
Yeah.
Right?
So for the mass retail investors, there are two things which comes out. You start investing by savings, all right? Bring your small portion. Let me bring my small portion on this other particular element. So the main aim there is, can you get your savings into money market? So that's one quick, safer investment for the retail majority. The next is also the penny stock, which a lot of individuals are taking up. But I have to put caution in there. As you get into the stock market, then you must work with your advisors to really help you select some of those securities that you're really looking into. Look at it from a saving culture, which gets into your money markets, build that wealth, then now start diversifying into other asset class. Yeah.
So let's talk more about the savings, because of course you cannot invest what you don't have.
Precise.
We know that the savings culture in this country is still very low.
Yes.
And according to a report that was released, a lot of people, their income has either stagnated or gone down. There was 60% of those surveyed. Yes. Their income has either stagnated or gone down in the past 1 year.
Yeah.
And so what does this mean from a perspective of training your mind to even start saving and investing? Yeah. Let's start with your PU, and then I'll give Alex a chance.
Yes, so if you plan to save, you'll never save.
Okay.
You have to have the discipline of doing it the other way around. You have to, on any source of income that you have, don't spend first, then say, I save. I think that is the cultural aspect that we need to address within, as a nation, actually, so that we have significant saving pools. Today, if you look at our savings as a nation, combine all the savings that you'll have, we are still less than 10%. In other developed markets, the principles of saving would always be 40–50% of an economy. And that's what spires into a drive into the growth. So saving to me will be a discipline. Start by having a principle and say, in each and every income that I make, can I have 40% of that income being invested immediately? So to me, it's a cultural aspect. It's not the lack of money, and that's where now the pooling of resources come to us. So today, if I'm running a money market, for example, bring your 100, bring your 200, bring your 500, bring 1,000. Collectively, your pool keeps on growing. So don't wait and say, this income pool I have, or the disposable income which I have, is not sufficient for me to save. It's the question of the discipline and just having a policy that I'll deliberately be saving.
Being deliberate in your saving.
Yes.
Alex?
I think in one or the other, I will agree with my brother here. But me being a businessman, I might differ, because what I believe in, for me, I'm more into trading. I need the cash flow, and I want to work. If you look at our country, I want to talk about 3 areas that I feel they are good to invest in. Number 1 is agriculture. Agriculture is a place where I can advise those who really wants to invest. Is a place whereby if you invest wisely in farming, the returns are good. You will make good money because the market is there already. The other thing, especially this one I want to talk to youth, is about the technology and innovation. If you look at the Gen Zs, these are the people who were born when the technology was there. So they are very conversant with it. They understand the technology very well. And I want to give an example of a company like TikTok, the one that comes from southern China. This is just an app that somebody develops, and they're making billions. You see, right now with the technology, each and every company, they want to invest in e-marketing. That is what they are doing right now.
Right. And allow me, Alex, now we come back to studio and continue with our conversation on money matters. We are just trying to figure out where we shall be investing this year, what options are available, and how exactly to decide your investment. And in studio, I have Alex Kidake, who is an investment expert, as well as Maurice Opio, who is the managing director at Kenya Commercial Bank Investment Bank, KCB Investment Bank. Yes. Well, thank you, gentlemen, for staying with me. Alex, before we took that link from Garissa, you were telling us about the areas that are most ripe for investment.
Yeah, thank you so much. Now, There's something that, I wanted to share with Kenyans, and I wanted to tell most of the people who wants to invest in this country. The first thing that they should know is that Kenya is a developing country, and we have so many people who are looking for employment, meaning when it comes to human labor, we have the resources. We have people who can be able to work. As what my friend said about the investment, for me, I will push and tell people that let's work. Let's use the resources that we have. Let's go to the KCB, to their bank, and borrow money, and we use it to trade. So I just wanted to share some of the regions, some of the areas where I personally feel that the returns are good. Number one, I was talking about agriculture. As you guys know very well that there's no way that you can, even if you go to farming, the market in this country is very, very big. You will get the market, the business are there, the land is there. We've got the natural resources. The second area that I was talking about, it was about the technology and innovation. You can look at what happened in this country, look at what fintechs are doing, and the M-Pesa thing, the way it's really, really doing very well. You can see most of the banks, the M-Pesa has employed so many people. That's an area that I can tell you, if these Gen Zs they use who are born during this era of technology, they can put their mind together with the support of the government. There's a lot of opportunity in the technology. The other area is about the renewables. Kenya is blessed with a lot of natural resources, and if you look at the wind power and the solar system, if we can be able to get investors, or both the local and international investors, they come and invest in the renewable, there's a lot of money in that, because there's monopoly in power industry, and if we can have some other players who can come in, and at least we have people who can bring the competition, even everything will come down and the market is big. Another area is in the real estate. If you look at urban, and nowadays in Kenya we have both the counties, and you can see what the government is doing right now. What they are doing, they are trying to come up with the affordable houses to Kenyans, meaning the government has already realized that Kenyans need houses. And that's a good area where investors can come in, they buy land. You know something fun about Kenya? If you go and buy, let's say, if you have money and you buy 100 acres of land and you subdivide it and you start selling immediately, you'll make even all more than 50% profit, just immediately. Because when you buy a big jack of land, what will happen? You will get it at a very good price. You subdivide it, you sell. Nowadays, if you look at our country right now, people are selling off-plan, whereby you don't even need to construct. People will pay you even before you start construction. And that's exactly what the government is doing. The government is receiving money before. So they got money from Kenyans, they use it to construct those houses. Now, the last one is tourist. Kenya, we just come from the epidemic, the COVID, and people really struggled. And right now, all over the world, what is happening, people wants to travel, people wants to see what is doing. And if you invest in hospitality, that's the last area that I can tell you for sure that there's a lot of money in tourism industry. If people can come and we invest there, and we get the support of the government from the Ministry of Trade, we try. You see, there's a time I was in Turkey, and what I saw in Turkey was that there's a lot of support that the government is giving the local people when they market their country, whereby they have a system. If you bring foreigners and they spend dollars in your country, the local people start earning some incentives. The government should encourage the local people, Kenyans, to help the government to market our country. The moment we do that, and you know very well that once I bring foreigners into this country and they start spending dollars into this country, I'll also start earning some incentives. Some developed countries, they have a way of helping the local people who bring those foreigners get their money, whereby if you go to a country like Turkey, when you bring people, you give them your number. So when they go to supermarket or anywhere they want to do any transaction, they give that number. So that one immediately it gives you some points and you start earning incentive. So let's also help to market our country. Kenya is a very blessed country. Thank you.
Right. Thank you, Alex. Alex has mentioned quite a number of industries or sectors that people can put their money into. And he mentioned real estate. Yes. Real estate in itself, for the most part, is a long-term investment. It has its risks. A report by Has Consult showed that the return for real estate averaged around 8%, which is below other short-term asset classes.
Yes.
So I'd like to hear from you, Maurice, when someone is deciding where to put their money, what exactly do they need to consider, whether it's from an individual perspective or from a business perspective?
Yes. So definitely when you're planning to make an investment decision, there are several things that you need to be aware of. One, what is the risk that you are taking to make that investment decision? So that means the asset you're looking at, whether it is a company, you have to understand how does it operate, what track records do they have in terms of performance, try to know generally who are the stewardship of that enterprise that you're looking to invest into. So that's what you'll call doing your due diligence exercise in anything you buy. So even taking a good example, land and real estate that you're referring into. Before you move even into that subdivision, you must have done your search and make sure that this asset is safe for me first to really invest into. Number two, you have to then take a decision and a view, this investment that I'm making, how much capital will I require to make this investment successful, and can I do it myself, right? So you can pool other like-minded investors, and that's something that as Kenyans we need to try and do it more and more, as opposed to waiting, saying I'll accumulate this capital and start making investment maybe in 3-4 years, that then will not really suffice. So those are the two parameters that you'd really get into. Touching back into the real estate, which you mentioned, giving an average return of 8% today. Of course, real estate is a long-term asset. It is a defensive asset that you'll have. So if it's a building, you'll have it there for so many years. However, there are other more asset classes which have also been created around a real estate. So you talk of the REITs, or the real estate investment vehicles or schemes, which then allows you to not physically own the asset, but you'll own that particular unit with average returns perhaps today talking of 10.5%.
Right. Thank you, Maurice. I am informed that we need to now go to a function where the inaugural Nairobi Environmental Diplomacy Symposium is ongoing. Prime Cabinet Secretary Musalia Mudavadi is speaking. Let's listen into that.
Let me take this opportunity to make it official. You will recall that last year, President Ruto hosted, in conjunction with the World Bank, the IDA 21 replenishment conference here in Nairobi, where there were several heads of state, including the current AUC, African Union chairman, the president of Mauritania. Ladies and gentlemen, that effort, that convention was able to rally, which has now become official from the World Bank, an excess of $100 billion as the IDA 21 replenishment to help support the IDA recipient countries, which are close to 75 or slightly more globally. And this perhaps becomes a very good forum so that the conversations that you come up with can help in enriching the use of those resources so that they are directed to environment-friendly programs in all these 75 countries. I think that is a very, very significant development. And I would really want to urge all of us to see the significance of having a very robust diplomatic initiative and engagement with other countries, because it is through that kind of arrangement that Kenya's leadership, in conjunction with other partners and friendly countries, have able to rally the global community to raise these resources. That is a very significant development. The other thing that I may want to perhaps just flag again very briefly is that as we talk of the environmental diplomacy, I also want to let this audience know that formally the Cabinet of Kenya has now approved the sessional paper on diplomacy and given the go-ahead for it to be tabled in Parliament, which will happen next week when Parliament reopens, so that it goes through the first reading, and then it will be available for further conversation and debate by a wider cross-section of the Kenyan people and our partners. This time, we are making it clear that diplomacy is not an exclusive club. We want diplomacy mashinani. We want the people to understand what is our policy across various issues, and we want them to engage so that it is no longer a mystery that diplomats are seen carrying a briefcase into a plane, and then they are seen coming back, and they assumed that they were just having a cocktail somewhere. Let us share in reality what is all this diplomacy about. It's also important to note that for Kenya's purpose, our constitution recognizes diplomacy or the foreign aspect as one of the arms or the pillars under the national security architecture. And if you look at Article 240 of the Constitution, it is very specific that it falls within that category. So Cabinet has also corrected an anomaly which has been lingering for a long time, because for some reason the foreign agenda was being regarded as just a normal administrative affair. And now it sits with clarity in accordance with the Constitution where it should have been for a very long time. So I thought this comes to you so that even within the framework of debate, we now fall within the security sector working group for planning purposes. So that is what I wanted to tell you. But there are other good things that we can do, and I want us to do together. I saw Joe Ageo here. I don't know whether he's still within the room somewhere. Yeah, and I was just talking about
That is the Cabinet Secretary, that is Musalia Mudavadi, speaking at the Environmental Diplomacy Symposium there. And of course, that particular symposium is going to look into the global environmental processes, as well as how to ensure that there is maximum impact from major environmental conferences, both in Africa and across the globe. as well as the future of environmental diplomacy. And of course, our reporters are on the ground there. They will be giving us a detailed report of the outcomes of that particular symposium in our subsequent bulletins. We get back in studio and continue our conversation on matters where to invest in 2025. And I am with Maurice Opio, the Managing Director at KCB Investment Bank, as well as Alex Kidake, who is an investment expert. Maurice, you were telling us exactly what you need to consider before you put your money somewhere. I want us to get practical. Assuming someone of their income, whatever they make, they can only manage to put away, say, 5,000 shillings in a month. Where does this person start?
So it depends on what shall. In terms of investments, the first basic principle that you should start on is saving. Saving allows you accumulate, build the capital that you need to do the investments in the long term. All right, so that will be the first principle. Whether you bring it to capital markets, put it to money markets, or the unit trust, as they are commonly known in the marketplace, or put some into bank deposit savings, that would always be the first step to that journey. The second step into that journey is now to look into the investment horizon. And the way I look at investment horizon, you cannot manage to invest as an individual, as one person. So it is, how do we pool our resources to create an economy of scale to get into a project? And that's where I'd left the earlier conversation when I touched on the real estate investment schemes, the rates, which then allows individuals to own or have a pit pie on a building, for example. So today we can take this building here and say it is worth X. How much money do we need to really put in there? So we can own it, 1 million Kenyans, and have it. More to that, I think also other classes are getting much ahead in terms of us now having reference to this physical asset. We don't need it. So everyone is moving to digital space. So you can get into a digital asset which has an underlying asset, which is a building, and allows us to trade. Because the other aspect of investment is always how easily can I exit the investment which I've made. Is there a market? And back to the real estate example, selling a wholesale building can take even 2, 3, 4 years, all right? But if we are 100 of us owning that building and it is liquid, we can be able always to trade.
Right. Alex, I would like to hear your thoughts in terms of, because you're more business focused, So when someone has these 5,000 shillings, how do they get to the point where they can now put it into business, and what do they need to consider first?
I think, according to me, what I believe in is the first thing, if you have money and you have capital and you want to invest into business, the most important thing that you need to do research. With 5,000 Kenyan shilling, you can still be able to use it and generate a lot of money. I think I've been in so many business. I want to give an example of myself so that even our listener can be able to relate it with it very well. My first business, I think I used to sell the mutumba. I used to buy some shoes from the second-hand shoes from Kikomba, and I used to sell them at those side of Githurai. And I remember my first capital was around 2,000, 3,000, where I used to go there very early in the morning. I get the shoes, and the profit margins were very good. It was more than 50%, because you buy those shoes with around 200-300 shilling and you sell them at 500-600 shilling. So what I want to tell people is that, first of all, you have to make sure that you have passion on whatever that you want to do. Do invest in research. First of all, understand the market, know what you are going to get into. The moment you do that, you will be able to make money, and make sure that whatever you are going to do what you love. And for me, I really believe in taking risk, going into the business, taking the risk. I don't really believe in putting my money somewhere, let people take the risk. I believe in going there, taking the risk. I want to give you an example of a gentleman in Kilimani who invested, he used almost 3 million to set up a car wash. And as we are speaking right now, the guy per day, I was talking to him, he told me that he washed almost 440 cars. And you see, he charges 400 shillings per car. So by the end of the day, if you look at how much this gentleman is making in a day, he's making around 15K, and his total investment, and you see, those are just from the washing can. He has the carpet, he does the bathing and all those things. By the end of the day, the gentleman was telling me in a day he make between 20 to 30,000 in a day. And look at the investment, it was only 3 million, and he pay a rent of 120 shilling. So with me, I believe in going there, working, because by the end of the day, I don't feel like giving somebody money to work for me. And let's look at the real estate. I'm in real estate, and you see, most people prefer maybe, if you live in Nairobi, you want to build up your house and go there and stay there. For me, I don't count it as an investment. Mm-hmm. An investment is something that can be able to generate resources. Mm-hmm. If I have 30 million or 20 million, and I am a business-minded person, I will put that money into trade. I use that money to generate resources, and I rent. I better go to Kilimani and I get a house or an apartment, I rent for 100,000, and using the 15 million, I can be able to put into the business, and I make maybe $1 million or $500,000 every month. Then I take the 140 or 150, I pay my rent. The biggest challenge that our people are doing right now in our country, they don't want to take risk. And it's called risk because you can put your money there, and if you are not very careful, if you have not done a good research, that's why we always tell people, and that's why the government should come in and talk to professionals, because it's very important for these people to get the theory part of it. Because the moment you have the theory, you can be able to foretell and be able to know how much, whether the business is going to be viable, you are going to make money or not. Mm-hmm. Yes, that is where now people need to go to school.
Right. You're speaking about the matters of risk, and of course different people have different risk appetites. I would like to hear from you, Opio. How do you determine what your risk profile is like?
So in determining the risk, of course there are several factors. As an investment bank, as advisor, we look several factors to ensure that the risk we take to you is commensurate. So the risk would be, number one, what is your age profile? For example, if I have someone who is in their golden years, then I have to make sure that the investment products I give you should give you regular income and protecting the principal which you put in. So if you gave me $1 million and you are, say, in your 60s, for example, I have to ensure that you need more income, because as you get into the sunny years, you need liquidity, what you can use in every day. So age comes as the first factor that you'll be able to look into. For a young person, then you are looking investment into a very long-term horizon. And that means you are able to take a risk which can continually keep on adjusting. But by taking that risk, also, you have got significant return. Alex mentioned, if you don't take a risk, you don't make a return. The more you take the risk, the more the return. But it has to be a calculated factor. So that will be the first item that you'll be able to look when you're looking into investments. The second aspect of it, what is your purpose and intention of putting up this investment? That's also a critical decision that you really need to have. Is it an investment that you'll put money in today, you want it back tomorrow, you want it in 2 months? Because that also will impact your anticipated return. Then lastly, of course, is the question of the capital that you have to look into. So those are the 3 parameters that you'd ideally look if you're making an investment case.
Right. Yeah. Is debt bad?
Debt is good so long as you have discipline. around it. All right? If you take debt to go into consumption, buy food, buy clothes, buy all that, then to that extent debt would be bad. But if you take debt to then invest, then debt is good. Reason being, there are several factors around the debt. Debt is always considered cheap, theoretically, but to common citizen, you'd say, I almost want it at 0%. So that will not happen in any way, right? So debt is cheap from a perspective of increasing what your target return would be. Today, if I give you money as Maurice and say I'm going to invest into your business, I'll be looking at a minimum return, say 25%. All right? If you look at the cost of debt today, even with the current existing environment, then I'll almost be getting 15, 16. Right. So that debt mix and what you put in would elevate your returns. But also, as you take into the debt, then you have to look primarily what would be the source of repaying this particular debt which are put into the business. That's what we have several misses, either in companies or even as an individual. So without planning for a debt, then you don't have to go for that debt. But if you take it to complement what you want to invest into, and what you're investing into is less, the return is more than the debt component which you have picked, then you have got that your return portion. So debt is good, but on the contrary, without a discipline around debt, then debt can be bad.
Right. Yeah. Alex, your thoughts on debt?
According to me, I feel that it's good to stay outside debt. If you want to get debt, make sure that you are not inside debt, whereby your liability exceed the assets of the business.
Right. Just hold that thought. Yeah. You shall give us more details in a little bit. I'm informed we need to take a quick break and pay our bills. When we come back, this conversation on matters where to invest in 2025 continues. Stay with us. Thank you for staying with Channel 1. You are watching BizCheck, and we are now getting into the second hour of the program. My name is Betty Kiptum, and Lucy Maura is my colleague on the sign language interpretation. In studio, we are having a conversation about money, where to put our money in 2025. My guests this morning are Maurice Opio, Managing Director at KCB Investment Bank, and Alex Kidake, who is an investment expert. Alex, you were telling us your thoughts on debt.
Yeah,
please go ahead.
I think according to me, what I was saying, that if you're in business, it's very important for you to stay outside debts. And you make sure that you avoid the inside debts. Inside debts, I'm talking about where your liability exceed your business assets. I want to give you an example of you find most of these companies, some of these, especially these small companies, they go take loan from the bank, and you find whatever they are taking from the bank is more than the size of their business. So it's very important, whatever that you are going to take or whatever that you are going to get out is less than what the size of your company. That is very, very important, because when you have business, the other thing that I also want to add on it is also very important to avoid negative cash flow. When you talk about negative cash flow, I'm talking about, a business can be profitable, but still, it can still go bankrupt. It has profit and still go bankrupt. That means there's no sufficient cash flow. When you are in any business, make sure that you have enough cash flow. So when you have enough cash flow, the business can be able to grow, because most people go into business to make profit. But if you want your business to be sustainable, to grow, the main aim in business, you have to make sure that the business is growing, because you can make profit but not grow. So the business has to grow. Thank you.
Right. Opio, you're nodding in agreement. Please share those thoughts.
Yes, so, and speaking just from his perspective, in a business, the money you have in that business, so you must make operating income into that business. If you go to business, what are the components that you're servicing? from the revenue that you're generating, number one, you need to pay your suppliers, right, who are making an input into that business. You have got your employees that you're making into. So that cost, you must always take it into the consideration. You have got your tax obligations also to pay out of that business. So if you look profit, they say cash is king always. What cash do you really have in that business? What you're calling the profit, is it supported by cash in that profit? Or is it a profit you're making out of the business, but if you look at the usages that you need to come into, and that's where Alex was mentioning earlier, when does debt not become sustainable in that business? So you can make a profit, but the obligations that you have in that business outweighs what you treat as profit to you. So that's also sometimes makes companies collapse and all to that. So you have to really balance that. A sustainable business must be built by proper cash accumulated in that business over a period of time. Yeah.
We know that over 70% of Kenyan SMEs, they collapse in their first 3 years or so of existence. And a number of issues come into play, including the financial problems.
Yes.
And sometimes you find that maybe they're not making enough money, so they have to borrow.
Yes.
And then the kind of business they get into, it ends up being a pending bill. So on paper, you have made money, but in reality, money has not checked in. How do you think businesses can surmount some of these challenges?
So the challenges, especially for the medium-sized enterprises or the SMEs, number one, yes, you can do business. But if you don't have systems to see what is getting into that business, what is getting out of that business, then you'll not know the source of capital that you really do have. So number one for the SMEs is to have good record keeping. All right? And in record keeping today, you don't have to sit down there and have someone in charge of your finance, someone in charge of your accounting. Today there are a lot of applications which have been developed, whereby you can do your entries of what you're trading every day. What have you sold? That is your income there. It is not yet an income to you. It is income to the business. And that's where a number of SMEs actually really get it wrong. I've made a sale. If I sell this cup today, you don't know in that cup what is my real income or what is my profit. So you might find it is 10 shillings, right? But if you are viewing it, that I've made 50 shillings, the cost to which you sold it, then that's not the business. So the first aspect is record keeping. With technological development, the innovations which have been done, there's several applications which synthesizes that. So that's the first discipline really that you need to go to. Number two, get a mentor as you grow the businesses. Even today, the businesses we are seeing today, the corporate which have grown over thousands and thousands of years, they started somewhere and were mentored into that scale. So that's another aspect that SMEs are looking. So you'll not want to work with a professional advisor because they might be expensive from your perspective, but you're not having a check. So that's what I would say. If SMEs can work around it, because they're the backbone of our economy, we have to support them and have them create employment. So we have to do that.
Right. Alex, your thoughts on MSMEs surmounting these challenges?
I think I've been a consultant to a number of companies in Kenya, and I have dealt with a number of microfinance. And one thing that I can tell you now, this is using the street knowledge, because when you're talking about SME, I want you to put your mind at a place like River Road. And why is it doing better than this other region? You know, what I always say is that what the government need to do is what we are doing right now, is to try and educate our people on, especially those people in business. We try to share with them the small knowledge that we have on how to run the business, because Most of these people just go into business to make profit, not for growth. I want to give you an example of some of the supermarket I don't want to mention them, that have been their consultant, and you have seen the biggest supermarket that were in this country. Most of them, they were there and they failed. And if you look at some of the mistake that this supermarket made, everything was to do with finance. There's nothing to blame the government. It was their own mistakes. Because you find that I want to give you an example of the way the supermarket operate in this country. They have suppliers. The suppliers supply their product. They are told that we'll pay you maybe after 30 days or on consignment. But what most of these supermarkets do, they forget that even after selling, this is not their money. This is suppliers' money. And they use suppliers' money to start expanding or having more branches. So by the end of the day, they don't have money to pay the suppliers. Those are some of the mistakes that most of these companies are making. You're using people's money to expand. They don't understand which one is their money and which one belongs to the supplier. What you have said is very right. What we need to do is we need to invest in a system. The moment, we have technology, and it's very important for us to embrace it. And we have to make sure that we do forecasting. We have to be able to understand what is going to happen after 10, 20 years in the business world. I want you to look at this Generation Z. Generation Z, as we are speaking right now, we are told from the research by 2030, worldwide Generation Z, they will be controlling almost $30 trillion US. So meaning this is an area whereby each and every person in business has to look at how we're going to handle this Generation Z. If you look at Generation Z, these are people who are so much informed. These are people who understand and people who like everything that is very transparent. But the only disadvantage with the generation is that they don't have patience, they don't have time. We are told they only have 8 seconds to be able to understand. If you want to market or if you want to sell to them anything, you only have 8 seconds. They cannot sit there waiting. That's why you see something like Instagram, TikTok is working very well on them, because there's no time. Now, if you're in business, how are you going to make sure that this is a niche? How are you going to make sure that you're going to take advantage of this generation and make money out of them? Because they are going to control a very big share in the market. So you must understand how these people operate. That's why you see even in politics, it's very, very difficult to manage these people before you understand them. So in business, if you want to prosper in business, the first thing that you have to understand is that there are so many influences. There's political, there's economical, there's social, technology, and legal. The moment you understand all these things and you know how you are going to face them and you have a plan, I'm telling you, there's a lot of money in this country and you'll be able to make money. And then the other thing that the biggest problem with the SME in this country is that you find most of them, they don't have enough capital. When we go to KCB, we are told they need a collateral. We have to put a security for us to be given that money. Now, these people, you find most of them, they are those wamama. They don't have any, they don't have the title deed, they don't have whatever. So before we used to have some microfinance whereby you are told you come in a group of certain women and you start saving and you get loans. And by the end of the day, you find that these people, they are not knowledgeable. You find that there are so many people are using them because they are getting some loans at a very high rate. By the end of the day, you go to a certain microfinance or a Shylock, you get a loan thinking that you have money to do the capital, but you are only working for those microfinance because the interest is very high. So it's also very important for us to tell these people, because as you are given money, you should also be able to understand how much are you also supposed to pay those people, because you can end up working for them.
Thank you, Alex. I'll have to take those as your closing remarks. I'm informed we have to go to the president who is speaking in Garissa. I'll just give you, Maurice, about 30 seconds to give us your closing remarks on this.
My closing remarks would be definitely encourage Kenyans. This is our country. Let's invest into it. Let's pool our resources and let's just grow it. We have to create the next generation by just inspiring them to save, invest, and sustain your life into the future.
Right, let's focus on our country. That is the message here. I've been speaking to Maurice Opio, Managing Director at KCB Investment Bank, and Alex Kidake, who is an investment expert.